Okay, working through the solution, guys. So as you'll see, this first question dealing with your pre-engagement has been set out according to what ISA 220 says, where you've got to look at the client's integrity, the ethical requirements of the auditors, the competence of the auditors, but we didn't have any issues there, so that was irrelevant. And then the fourth thing that it says is if it is a recurring audit, but it's not the case. This is a brand new audit, so I don't have any information from my prior experience that's going to affect my consideration. Okay, so client integrity, ethical requirements, and then per our notes, other factors. Okay, so in terms of the client integrity, things we can look at, we used ISQC1 here for this one, because it's the only standard that helps us with assessing the client's integrity. One of the indicators, not giving us permission to contact the previous auditors. Yes, they have explained why, but it's still a factor to consider. In addition, there is non-compliance. There's fraudulent financial reporting, at least in the first 6 months we suspect, because they only seem to have addressed it post those 6 months, and they are trying to push for the lowest fee, so maybe they're trying to reduce our scope in that perspective. In terms of the ethical requirements, I looked mostly at the acceptance of a client or a new audit. Okay, and we've got the fact that if we don't have all the pertinent facts, like being able to contact the previous auditors, we could have a self-interest threat to professional competence and due care. As with a self-interest threat to integrity, if we are concerned with management's integrity. And as soon as we've got indicators that management's integrity is lacking, this section becomes relevant because it means that it could rub off on us. Okay, the low balling of the fee or aggressively trying to reduce our fee, if we do reduce the fee, then we potentially face those threats to professional competence and due care. Tax return preparation, so in your independent section, it's allowed, it's acceptable, so we just note that here. And then the previous financial manager being involved in fraudulent financial reporting, if we accept this audit only, do we have a responsibility to go and understand that matter and discuss it with management to ensure they address? The rest of the auditor's responsibility I haven't included here because we don't have the engagement to withdraw from yet, because we're still considering accepting it. Okay, because you'll see that that section 360 and then 260 from a client or a CA in business perspective is going to start coming up very often, the new standards that have been included. Other factors, can they pay the fee? Business factor we need to consider because they have financial difficulties. Okay, risks at the financial statement level, guys, I'm not going to go into too much detail, but obviously a new client, there's 3 risks. We only focused on the 2 because they only wanted inherent and control risks. They didn't ask for the risk that the auditor doesn't detect, which would be a risk here because we knew we lack experience. Okay, something that wasn't discussed in my solution, foreign regulations, because as we can see, the Rugby World Cups are getting played in foreign countries. This specific year, it is in Japan. So, non-compliance with those regulations when you are operating in their country could result in penalties or you not being able to operate in that country, thereby affecting your ability to continue because your whole company, your whole business is structured around being able to host these Rugby World Cup or manage these Rugby World Cups in whichever country they are in. Okay, all the concerns with the fraudulent financial reporting of the prior financial manager, and then the concerns with the new financial manager, lacking knowledge because he's come from an admin background. Okay, the new computer information system, all those risks, guys, if you didn't put down any of these, but you put down risks that are linked to computer information systems or new, the conversion, you will be able to get a mark or 2, even though it's not here. So provided it's valid, you'll get your marks. And then all the going concern risks. Trading in a net liability position. They won't be able to pay their debts as they fall due without finance, non-compliance with the Companies Act because they are recklessly trading. And then, again, something not discussed in my solution, the tight deadline. The reason I didn't discuss it is because we had actually put down the risk in the questionnaire and then didn't re-put down that there's a risk when we saw that information in the working paper. But as soon as there's a tight deadline, there's a risk that they don't identify subsequent events and account for them, and that they don't have enough time to review the financials, so there could be errors. Okay, in terms of the weaknesses in their payroll cycle, specifically for contract employees, this was such a nice question because it wasn't your standard payroll cycle. So you needed to use some of your instincts from your other cycles to help you. Okay, a lot of the purchases cycle was in here too, because of the familiarity in the process. You need to be employing people who you would be using on a regular basis, so kind of like purchasing from a supplier who you would use on a regular basis. Okay, so a few things here. There was also the EFT payment, which we deal with specifically in our purchases cycle. Okay, so make sure you work through this solution and you see all these risks and weaknesses, because they wouldn't be apparent if you literally just did payroll cycle to this cycle, because there were so many differences in what happens. And it's important that you're able to adapt to a scenario like this, because they're not always going to give you the exact cycles you're comfortable with. Okay, so initially, they don't split the roles into sourcing the job titles, so there could be duplicates. They could all go and source for one job title and nobody sources for the other job titles. They employ 4 people for one job and they don't have anybody else for all the other titles. Okay, so that segregation of duties is really important. There's only a job title as a criteria, so huge risk there, because now you might be getting people with inappropriate skills, experience, and then doing the work incorrectly, resulting in payments to them for work that you're not satisfied, having to get it fixed, and so on. Okay, so this is something like we would have done in our purchaser cycle when we are choosing a supplier. So get proof of qualification, references, experience, before we just approve this person to take on the job required. And then again, no authorized or approved list of contract staff, something again in the purchaser cycle of suppliers you want, because these are the people you're using to get the stuff for. So same here, you're using these people to perform a service, but it's a very similar service that gets done every 4 years. So surely if you've got people who are reliable and experienced, you might want to use them and so have a master file of their details. Okay, then standard payroll cycle, you have to authorize the contractor. This was not done, so no approval. My source document controls are weak, blank forms, they're not pre-numbered or sequentially numbered, they should be. The following program checks were missing, and again I've linked this to both times that they would be inputting the data. So when you are filling in the contract or when it is being uploaded into the payroll app, only going to get 3 marks for that. So your access controls, gaining access to the system, alphanumerical, and there's all the different examples where that's applicable. Size, ID number is applicable. You can't really use a size for a bank account number because different banks have different account numbers, so it's not a set size, whereas an ID number is a set size of 13 digits. Range check for that contract period, making sure that they aren't ending their period before it starts, so just little things like that. And a sign check for the fee, it shouldn't be a negative, it should be a positive. Okay, and then just literally putting those down on the next slide to say this is what needs to happen. No access controls over the contracts because they are saved on an open network. Got to make sure they are. And then something I didn't discuss, Sequence checks of the completed contracts, because this way we're going to be able to identify which contracts they haven't received back yet to fulfill that role, because they need to fulfill all the vacancies. Okay, so if they don't do that check, they just go and upload and they don't know what job title has not been satisfied yet. Also, something I didn't discuss, batch controls, because the contracts are only uploaded at the end of the month, but the contracts will be coming in throughout the month. So record counts, hash total, financial totals as your batch controls to ensure that all contracts do get uploaded and they don't duplicate the upload of contracts so that an employee is getting paid twice. So a record count for the number of contracts that are there, hash total, any numerical fields. So in the contracts, your numerical fields were your ID numbers, your bank account numbers, and then your financial total, which would be the fee, the contractor's fee for each. Your master file amendments, they don't follow the protocol for master file amendments. They don't have a form that's authorized. They don't have restricted access to a master file. They don't even discuss a master file. They discuss a payroll app. That is not a master file. Your payroll app is how they're going to pay each employee every time they due a salary or a wage. So you need to actually have a payroll master file that keeps all the details of your employees, and then the payroll itself will be the transactional end of it. Okay, so all my master file controls are missing. There's no log of those master file amendments. There's no recon to the hard copy documents. So lots of marks here, guys. Very important now to remember where there is any change to standing data, master file controls need to be there. No reconciliation of the contracts to the payroll schedule or to the project schedule to make sure that all contracts or job titles have been fulfilled, that they haven't got multiple jobs filled for one job title. So that needs to happen, and it doesn't necessarily only need to happen by NAS. It could have happened before NAS or after NAS or by a manager. Then the payroll is not approved. Once it's been run, that should always be approved. And then your EFT controls, again, just limited because you're going to get the same mark when you put down the recommendation. EFT requisitions, they must be authorized, they should be reconciled back to the payroll and other supporting documents. So you could even say back to the project schedule. Okay, only one person releases, and they release it at a set time, but that set time might not be enough for all of the payments to be loaded. So they should only be loading them once they are comfortable that everything has been actually loaded onto the system. Okay, our substantive procedures for the legality of the board resolution. There's your board resolution. It's a section 45. So I've got to go and test, have they met all those requirements? So was notice given for the board meeting? Was there a quorum for the board meeting? And did the majority vote in favor, first and foremost? Then I go into the details of financial assistance. Did they comply with the MRI requirements? Are they satisfied that they have complied? And then, did they meet solvency and liquidity test requirements? So I can go and reperform or recalculate solvency and liquidity. I can go and inspect their financials for their ability to pay their debts. Were the terms fair, looking at market? And then, was written notice given to the shareholders and the trade unions? In terms of my special resolution, was notice given in terms of a public company? Was there a quorum and the number of voting rights required to vote in favor for that? Director's personal financial interest, because of the director interest. So guys, remember, if you are doing a section 45 financial assistance to a director and it's actually not to the director but to somebody related, you're always going to have this as another section because the director has an interest. In addition, let me make that clear, if it is financial assistance to a director, not somebody related, this section is still going to be applicable. Okay, because it's about the director having an interest, whether it is his interest or related to someone. And so in terms of that standard, we must test that he disclosed his nature with all the requirements of it, and that he left the meeting, he didn't take part in the voting, he didn't execute any documentation. My non-compliance, Companies Act, we had reckless trading, which we've discussed already previously. Audit committee, because Companies Act is now saying legislation, you have to have an audit committee if you're a public company. And that audit committee needs to have at least 3 members, and although it doesn't say independent, non-executive, it does give the requirements ultimately that they are not executive and that they are independent. So I've just consolidated it by saying that, because you could actually have put down the requirements in the Companies Act to show that it cannot be an executive director and ultimately he must be independent. And then I go and prove that if they are complying with the fact that it's only independent non-execs, there could only be 2 in the committee, so it would be non-compliance. Okay, the financial assistance to the related party. Yes, we've just audited it, but we audited it based on how I would go about testing did they comply. Through doing that, we would have realized they haven't complied. And so now I can discuss the non-compliance of it. Okay, so there was no special resolution. They didn't consider the terms of the MOI, and they don't satisfy liquidity and solvency. And so I prove that once I've put down the theory, and note that the directors that were present now could be held liable. And then just directors' conduct and liability of directors, because I can prove that they're not acting in the best interest throughout. King, compliance with laws immediately when there was non-compliance with any law, but specifically we were able to pick up the Companies Act in the working papers that were given to us. So I put those down and I'm getting 2 marks for nothing really. Directors' composition, we are comfortable with picking that up, or you should be in terms of the board. And then the audit committee, once again, proving the same thing as we did for the Companies Act. There cannot be 3 independent non-execs, and the chairman would have to be part of the audit committee if there were only independent non-execs, because they only have 2 independent non-execs and the chairman is one of those. Solvency and liquidity, so just that they should be monitoring this, and then your director's conduct, exactly the same as your Companies Act. Finally, the accounting treatment for that court finding. So I first prove that we've got a post-reporting date event, and this is the standard way I go about discussing it. That there is an outflow, that it was after year end. I then discuss that there are 2 types, and then I need to prove which type it is, and we prove that it is an adjusting. This is an adjusting event before the audit opinion has been given. So this is all happening in period 1 after year end. Okay, so we have a responsibility to identify, and if we do identify, then we have to make sure they adjust if it is adjusting. So this is the situation here. I then go and prove that a provision should be raised because it is a present obligation. They have the amount, although if they were to challenge, it could change. So that's why we're going with the provision, and that disclosure should be included. When we get to how we go about auditing, we do a general procedure in terms of our management representation letter. I then go and test the details of the actual journal entry. So agreeing it to the court case findings, proving that this is a post-reporting date event that is adjusting first, and then the amount. I can get written confirmation from the attorneys because this is a legal scenario, and then making sure it was correctly presented and disclosed in the financials. Okay, nice question, testing quite a lot of your syllabus. So I hope that you managed with that, guys. If you have any questions, you can email me on this. Otherwise, I'll see you next week for the next exam that's been prepared by CA Campus. Awesome, guys.